you will be the only listed car dealership network, the automotive dealership network in India. And this is a fresh issue. And also, your existing, the promoters are also offloading some part of their stake. So can you give me a sense of, what the capital will be raised for, the timing of this, at this point in time, and, then what the final shareholding will look like?
Yeah, sure. So TPG, one of the larger PE funds in the world, invested in Landmark 2014-15. So they picked up around 28%, 29% shares at that time. Now their fund life has gotten over. As you can well imagine, it's already 8 years, and the fund from which they had invested is they need to return money to their investors. So that's the primary reason for this IPO. It could have been later when our profitability, the track record would have been even better than what it is today. We are only getting better as time goes by. The COVID period is behind us. The premium and luxury cars are selling more. The after sales base is also getting better than what it was. So 552 crores, 402 is the secondary, predominantly by TPG and some angel investor who had invested a long time back. As a family, we will be continuing to hold 55% shares post the issue. So this is an important statement I'm saying. In the DRHP that we had filed, I was to offload 60 crores of shares for the family. Now we have reduced it to 10 crores. The reason is that at this valuation, I don't think it's a good sell. So that's why we have reduced it to the bare minimum that we need right now and not selling any meaningful number.
So you're not happy with the valuation then?
I'll be happier with the valuation going ahead when I believe that market will value us better.
Okay. So, from the get-go, you are factoring in a lot of upside clearly. So then again, it brings me to the question, why now? You did say, that TPG, go ahead.
So that's the primary reason. We could have done it 6 months earlier. We could have done it 6 months later. There is no, it's just that we had applied and our permission also would have gotten stale. So we had a certain timeline to adhere to. And I think what has also happened is that there is a clear, decisive understanding in people's mind that the premium and luxury cars are doing well. So the situation is good, the environment is also good. So why not?
Sure. And how much will TPG be holding by the end of it, or are they offloading the entire stake?
No, they are not offloading the entire stake. They also realize that the good times have just begun. So there is really no game in selling it all. I mean, they waited patiently for all these years. So they will have, I don't know, what, 11, 12% post the issue.
Understood. So, interestingly, you mentioned that the premium and luxury market, and there is a momentum, and a lot of conversation around how that segment has clearly done well. That does form the premium and luxury brands, a large part of your PV, dealership portfolio. You also have commercial vehicles. But do you see a bit of challenge coming in from the D2C model as well? The new age players, some of them, don't perhaps, go to retail from the get-go. And we've seen the likes of Ola, for instance, that's not also the segment you play in, but, started with DTC, now they're putting up retail centers again. But how do you think about that? Will that be a change?
Direct to customer is what you mean as far as sale is concerned. As far as automotive in India is concerned, I don't see any chance of that happening. Mercedes has changed their business model, which is kind of a model which is to be, it's good to understand it. From 1st October, what they did is that the entire stock is out of our books. Also, what has happened is that there is all India one price. So there is really no discount and inter-dealer competition. People, if you go to an Apple store, if you go to a Louis Vuitton store, you will see that you don't suddenly go there and start negotiating. So this is the culture that we want to inculcate. So luxury cannot be at a discount. Now that's what we are trying to portray, and we are successful at that. So there to give the experience, we are there to handhold the customers. Direct to customers, impossible.
Okay, okay. At least in the car market, you think that the experiential
No,
element
no.
will stay.
It is the experience. Nobody will buy a car online without sitting in it, kicking the tire, doing the test drives,
Yeah.
uh, seeing the colors, taking the family view. I mean, that's how it works. It doesn't, nowhere in the world is it happening.
And I agree with you on a personal level also. I think, in fact, if anything, the market has reinforced that belief, right? The ones who did start DTC are ultimately going retail. So there's definitely merit in what you're saying. But like Mercedes now has the centralized, ROTF system, what that's what they call it. Would you also, sort of consider, negotiating this with your other OEM partners?
So
You do.
this came from them more than us, from
Sure.
Mercedes-Benz is what I'm saying. And they have been trying to introduce this for a lot of other countries too. So this is something which has come. I think it's a global mandate that they are running, and
Yeah.
as many markets they'll be able to do it. It only is better for everybody. But the other brands, I don't know whether they will be able to do it. Mercedes has a certain smallish volume in the number of cars that they sell in a month, because this is a
Correct.
logistical nightmare. I mean, they need
Sure.
to get the KYC of the customer, the address proofs, the GST numbers, the invoices, and our customers are also last moment, they will suddenly say that they would want to buy it in their son's name. So the whole process starts all.
Hmm.
So this is not a very easy thing for people to do. But I'm sure that the industry is watching, the luxury guys, the other guys may look at this going ahead. The mass market, I don't think so.
Also, sir, there is no precedent really to something like this, at least in the domestic market, right? So again, comes back to the valuation question. We've only seen car trade companies, or car tech companies get listed. Valuations there have really plummeted recently. So although it's not a direct comparison at all, but do you think how do you avoid that? And yeah.
So I mean, as far as say car trade is concerned, they are into the lead sales and advertisement. So they may be competing more with you than with me, is what I would like to
Sure.
submit.
Like I said, it's not comparable, sure, but
So the thing is that in all countries, whether it is in America, whether it is in China, Europe, even in South America, there are listed dealership chains, and they have been in existence for a while. I'll give you the example. AutoNation in America, which is the best
hmm,
known as such,
hmm,
got
hmm,
listed in 1990 at a
hmm.
110 million market cap. It went on to create 13 billion. You can see where it went, where it started, where it went. In China, whether it is China, Grand Auto, and so many half a dozen other dealership chains. So if India has to become the third largest auto market, which it is going to be, we need some
Sure.
organized players. How much can a family bandwidth, management bandwidth, and capital take you? So if India has to happen, it is high time that this has happened. In fact, it's too late, according to me. There should have been many more before us.
And also, private equity participation in businesses like yourselves, you, I think, also have the distinction of being perhaps the only ones, to have a reputed fund invest in you. So, do you think that this also paves the way for other players, perhaps in some, more consolidation, professionally run dealerships to now come through, and they will perhaps be the ones who will, sort of grow the market and be more prominent names in the business?
I would think so. So the point is that there are two impediments to this process. One is that the Indian dealership fraternity, a lot of them are close friends of mine. They have a tendency to run the business themselves, and they are
Yeah.
unable to let go. I mean, they want the decision making with themselves. This is the first problem, and the second is that the tendency to own real estate. Now, this is something which is an avoidable thing. Most people in right now with looking at landmark, many people have changed. But otherwise, there was a great fetish for buying real estate, expensive
Mhm.
real estate, taking loans against that, which was
Hmm.
difficult to service. So the private equity, the public markets really don't like people putting in money in low return
Sure.
assets like the real estate. So this is what people will have to kind of let go of, and then one can see more traction here.
And for the retail investor, let's say, and I'm sure you would be hoping that there is good retail participation in the issue.
Absolutely. Yeah, yeah.
Uh, so for the retail investor, how do they, and if you had to communicate to them, what would you say is the upside to the business? There is no precedent, like we've discussed. So how do they, value their prospects, investing in something like,
So historically, the car dealerships have been trading at a premium to auto manufacturers in across the world. That's what we have seen.
primarily in the developed markets?
Yeah, wherever they are listed, because both are only available in the developed markets,
Sure.
the dealership as well as the manufacturer. So if you will see, there is a delta. There has been a delta always. Now you see where the auto manufacturers are trading in India. They are at a significantly higher valuation than, say, a Daimler or a Volkswagen or a BMW, which is trading in Europe. Now, this is
Mhm.
India. So one needs to take that into mind. And the dealerships are generally trading at a premium to the OEs. Because why are they trading at a premium? Because we have an after sales revenue, we have insurance
Yeah.
and finance revenue. Our capital invested is significantly lower. Our fixed costs are significantly lower. So there are reasons why this is happening. And I believe that over a period of time, that's how it should and will play out.
So in India, you do expect a similar sort of multiple,
I'm hoping. I don't know what to expect. I mean, I'm just hoping that because this is what it deserves in my mind. If it goes through, well and good. It's over a period of time. We will have to consistently perform, show a great return on capital employed, and show the growth which will come, and people will slowly, gradually understand that this is a great business, a model to be invested in. I believe people like Warren Buffett have invested in this business in their personal capacity. So there is there is a reason why they do that.
Talking about the business itself, how do you look at your next 5 years? Let's say footprint expansion. Will you continue only working with the brands that you do have, or do you think that you will perhaps expand your presence in other segments like CVs? You only have a show clearance so far. Will you add more segments as EVs become bigger?
So in the chair that I'm sitting in is the chair of what I have been calling for the last 3 days, the chair of Sachdev. Now, what is Sachdev? Sachdev is a character in Mahabharata who knew the future but was cursed not to talk about it. So So in my case, at the eve of the IPO, there are certain questions which I'll not be able to answer. But once we get listed, I'll be happy to connect with you. What I can say right now is that growth is a way of life. I'm borrowing this from Reliance. That's not exactly. I've been saying some very headline grabbing sentences like our logo is the lion and the lion doesn't sleep hungry. All those things to kind of tell you something which I can't be beyond the point talk.
Sure, but
Uh,
what's your own view on different segments? Let me ask that, not from a
so we will stay in the premium and luxury. We will not go down. We will not go down into three-wheelers, two-wheelers,
okay.
small ticket items. Our focus is passenger cars and premium and luxury, and there is enough now. People are buying more premium and luxury cars. 20% shift. There is from 2017 till now. There is a 20% shift in people buying three-box cars rather than two-box cars. So there, and even the chairman of Maruti, Mr. Bhargava, went on in press a few months back saying that it's a challenge for the small cars,
No,
and I'm
absolutely.
happy that they have a challenge.
Mhm. Right. Okay. So footprint expansion, of course, is something then we'll
It will
talk
something
about.
happen. What will happen is, see, 30% of what we have done so far is by way of M&A. 112 outlets, 30% are acquired over a period of time. We have acquired a few even in the last year and a half when COVID was on. Now, during this much that time, we have been expanding. So once we have access to capital benchmark valuation, I'm sure we will put foot to the accelerator there.
So through the M&A route itself, you'll continue.
That makes more sense if you ask me.
And do you see opportunities there? I mean, currently, with quality dealership networks that you think are
Yeah,
there
yeah.
opportunities?
There are a lot of people who need not be in financial stress. There are people who are in financial stress, and there are good people who are not in financial stress, but they have succession issues. There may be some disinterest. People may be wanting to migrate out of the country. Lot of reasons I know for a fact. Now those guys can join the umbrella brand of Landmark and work for a few years within that geography, or to kind of sell out completely and
Right.
get some valuation. Right now there is no exit for them, unfortunately.